Welcome back. I'm Michael Bull, and you're watching or listening to America's Commercial Real Estate Show. This segment is brought to you by Apto, your brokerage in the cloud. Visit apto.com. My guest is Mark Grinis. He's Global Real Estate Investment Funds Leader with Ernst Young. They just put out this 2017 Global Market Outlook. And what I'd like to get from you, Mark, is some tips, some strategies, some takeaways here that based on this report, people who maybe run companies and use a lot of space, or they own commercial real estate, what should we get out of this for some tips moving forward?
Well, we start the report and we first kind of take a big picture view, and we characterize this business as, are we in a golden age of private equity, or are we in fading glory, meaning kind of like a late cycle, and the optics. I think we have, real estate has really taken its kind of rightful place along the other investable assets. It's really got the attention of the institutional investors, and where allocations really all across, globally, are looking at commercial real estate as something that they should be investing in. There's a commercial out, the old adage of 60-40 should be your allocation between bonds and equities. And there's a commercial out there now that says, well, no, it's not that anymore. You need to have 20% in alternatives. Well, guess what? That's us. And we found our kind of our rightful place amongst all other asset classes. So, I think the investment capital is there. The key takeaway is certain you're listening to those investors and providing the products that they really want to. We looked at by property type and what investors are looking for and what the managers or the operators of these vehicles are looking to invest in, and they aren't always exactly in line. They're looking at student housing, they're looking at healthcare, while a lot of the managers and operators are saying, look, I really want to be in development, and some of the investors don't. So carefully reading where the investor class is and figuring out the right product for the time. Open-ended fund, closed-ended fund, separate accounts, all the different vehicles that are tailored toward that investors globally, because now you're really servicing a global a source of capital.
Yeah, that's a good point. And you mentioned some various sectors in your outlook. Is there certain sectors that you would recommend?
We, obviously, I think Europe is starting to see signs of recovery, and there might be a great entry point. I think we feature a number of countries around the world. Obviously, China is starting to really, even though there's been a lot of leverage and a lot of focus on it, that's one that we got to look at carefully and watching. But around the U.S., a lot of the dollars that have gone into maybe the core markets are really starting to peel off a little bit and looking at some of the secondary locations. A lot of the New York and LAs are starting to migrate a little bit to the Floridas, the Denvers, the Las Vegases. Not to say in total the biggest allocation of dollars will be New York. California will get absolutely its fair share, but we're seeing a little bit around the edges. Those in search of yield are starting to look at some of those secondary locations as opportunities to provide above average returns. So I think that trend will continue.
Yeah, that's a good point. We're headquartered in Atlanta, and we do investment sales all over the Southeast, and we are seeing more activity in places like Raleigh and Nashville and Atlanta, and of course Miami's always been hot. But
big markets are always safe, but some of the secondaries will start to see some dollars.
Yeah. But what about sectors moving forward? When you look at an outlook at, are there certain sectors as well in the U.S.? You mentioned I think student housing. You mentioned medical. Are there certain sectors you guys like?
I think multifamily has held up very robust, but it feels a little bit late. But when you think about in a rising interest rate environment and a growing environment, does assets that reprice on a monthly basis or every 6 months or every year, a good fit for where we are in the cycle? I think it is. I think you have to be cautious. Single family housing, finally the 30-somethings deciding that maybe it's time to settle down, and so the suburbs are going to start to see some activity. So I'm a little bit, the suburb was dead was a theme a few years ago. I completely disagree. I think the suburbs will see some strength in the next couple of years. Certainly single-family housing will as well.
Yeah, and you mentioned multifamily and single-family, and I think another aspect there is that, if rates do rise and it makes harder for home buyers to buy, that could be a boom for multifamily moving forward.
It continues to be favored amongst investors survey, and I'd like to see some dollars allocated to the asset class.
Yeah, I know our investors in multifamily, they say, people have to live somewhere.
Yeah, and I think the one fact of there's been a lot of doubling up. The 6 people in the 20 square foot flat in New York, they find that when they get out into the suburbs, they actually will use more space, and that doubling up effect, I think will kind of rear itself in a positive way for absorption and demand.
Yeah.
So,
what about a tip for
the basement will no longer be occupied?
That's right.
It'll turn into a unit.
That's my man cave. What about a tip for our listeners and viewers related to cybersecurity? It seems like that's always a scare, whether you run a company or a building.
I don't want to end on a downer or anything scary. However, we are an industry that moves big dollars and big transactions, and it's an area that is fruitful for fishing, if you will. And so it is something that has to, as we get more technological, our building systems are integrating, that have internet feeds, that are online, that face, there are open platforms to the internet. They will be targets, and a strategy of managing all of your platforms, your hard drives, your encryption. You have to have a plan. Just changing passwords is not a plan. Yeah. You got to have a bigger plan. And as we go forward with a lot more innovation, it'll become more and more important.
Yeah, well, good point. And there's more information in the 2017 Global Market Outlook. Check it out. We'll have a link on our website. Mark, great information as usual. Thanks for joining us.
Enjoyed it. Thank you very much.
And thanks for joining us out there on the radio stations, on YouTube, or the show website, or some of the podcast sites. We appreciate being with us. Come join us next week. We're going to have a show called Power Your Business with Integrated Technology. You don't want to miss that. Until next week, be sure that you always lead, learn, and laugh, and join us for America's Commercial Real Estate Show.